Today's market highlights. Gold and silver are soaring, the dollar is shrinking, stablecoins are looking bloated, and Bitcoin has dropped below $87,000. Is this wave a sign of changing times, or is everyone just losing their minds? When is the best time to buy the dip on Bitcoin? It's Monday, January 26th. This is the BitcoinTV Chinese channel. Where's the convenience store? I'm Michael. Let's first take a look at the most important data from the past 24 hours in the crypto world. So after this round, has everyone seen things clearly? The world really has changed now. People are starting to flock back to the old saves. Silver has surged to $100, gold is heading toward $5,000, and the weekly increase can reach as high as 8%. In the past, this would have been unimaginable. At the same time, the US dollar is shrinking, and everyone is worried about a possible rate hike by the US Treasury. In times like this, Bitcoin's definitely taking a hit, but there's no need to panic. Even though Bitcoin's falling, it hasn't completely crashed, and the miners are still holding steady. It's not that people don't believe in digital assets, it's just that the big players think the outside world is too turbulent right now. They need to take shelter in the vault for a while. Once this wave of risk aversion passes, these people will come back to look at what? They'll be looking at returns. Alright, it's Monday morning at 8 o'clock. We've released the weekly review exclusively for our gold members, sharing our outlook on the overall market trend for the coming week, as well as our analysis of Ethereum and Dogecoin. We hope this will be helpful for your trading. Last week, Binance experienced a wave of withdrawals, and it was quite a big deal. Over $6 billion were withdrawn just like that, setting a new 3-month high for withdrawals. Bitcoin, Ethereum, and even the old stablecoins on the Ethereum chain are all flowing out. Looks pretty scary, right? But if you only focus on the outflows, you're just being misled by the big players. Look, over on Tron, more than $900 million quietly flowed in. What does that tell you? The money hasn't really gone far, it's just been moved from one pocket to another. This is really just those big players rebalancing their portfolios. They think the current market is too hot to handle, so they first convert their risky assets into cash, then move that cash to another network, ready to jump back in and scoop up bargains at any moment. At times like this, liquidity is bound to dry up, and the market is definitely going to look bad. So we need to keep an eye on whether this wave of withdrawals will spread to other exchanges. If everyone starts pulling out, then a real major liquidation might not be far off. From a news perspective, by January 30th, the US government is definitely going to stage another shutdown, and we'll be stuck in another tug-of-war between the two parties. So before January 30th even arrives, Bitcoin has already been scared below the $87,000 mark. This is a classic case of when the gods fight, it's the little guys who suffer. So this drop happened extremely fast, not because people don't want crypto anymore, but because those who were highly leveraged got liquidated by the system. In just 4 hours, $320 million was wiped out. These are all blood-soaked chips. But you have to see the bright side. There's also some good news. The open interest, OI, in contracts has already dropped from $47 billion to $28.4 billion, which means most of the bubble in the market has been squeezed out. Right now, the situation is that politicians are putting on a show, speculators are leaving the market, and only the truly calm money is waiting for the spot market to open. So as long as this round of leverage is fully cleared out, the next development will depend on whether the big players are willing to step in around $86,000, whether the price can attract real spot demand, and whether open interest can quickly build up again. These factors will determine if the volatility will continue. Alright, please give a like and turn on the notification bell, because turning on the bell lets you see the title at a glance and keeps you updated on what's happening today. Recently, our show's fanbase has been growing especially fast, so I want to say a word to our new friends. Here, we help you deepen your understanding of the underlying logic behind the global macro game of digital assets. We keep a close eye on news and data, hoping that when you enter Web3, you'll have a clear perspective and make rational investment decisions. All right, let's look at today's headlines. We need to pay attention to a strange phenomenon in the crypto world. What is it? For a long time, people have been hyping up stablecoins as if they're going to replace Visa, replace MasterCard, and become the savior of the entire international payment system. So people started talking about annual transaction volumes in the tens of trillions as if that proves their point. It looks lively on-chain, but what's really happening is that big players are just shuffling chips around, moving from one chain to another, transferring from one wallet to another. It's not ordinary people genuinely using stablecoins to pay their everyday bills with real money. So this prosperity, which is really just a numbers game, has actually inflated the status of stablecoins to an unrealistic level.
In 2025, although the annual transaction volume of stablecoins reached $3.5 trillion, only about 10% of that was actual payments. Of the roughly $390 billion in real payment volume, B2B corporate payments accounted for an overwhelming 60% share, totaling $226 billion. Global payroll and cross-border remittances contributed about $90 billion, while capital market settlements are still in the early stages, amounting to just $8 billion. The data shows that the main value of stablecoins is still driven by corporate trade. In terms of geographic distribution, stablecoin payments demonstrate a strong centripetal force toward Asia. Singapore, Hong Kong, and Japan together account for about 60% of the global transaction volume, far surpassing the markets in Europe and the United States. It must be pointed out that the vast majority of the massive on-chain transaction volume comes from exchange rebalancing, arbitrage, and smart contract loops. These are internal operations of financial infrastructure rather than widespread end-user payments.
All right. In other words, stablecoin trading hasn't died out at all. It's just not at the level of total takeover that people hype about. It's more like enterprises are using it for settlement. In channels like international transfers, it's already running smoothly. But there's one thing we need to be clear about. If we filter out the noise from wash trading and arbitrage, the real scale of stablecoin payments has actually doubled in a year. This shows that in the world of stablecoins, there is a real demand for connecting fiat payment channels. So how do we connect digital assets with fiat currency in the digital world? MiPay is a unique tool for this, and it's not anonymous. All you need is an email address, and you can legally convert your USDT into RMB or the fiat currencies of over a dozen countries through UnionPay using MiPay. Here's the download link for MiPay. You can scan the QR code to experience MiPay's compliance for yourself. The weekly review we released this morning is meant to help everyone with simple indicators, so that even without BTV, Xiaoping, or Michael, after a period of learning and following along, you can build your own trading system and determine whether you should buy or sell next. So looking at the market over the weekend, the liquidity was as dry as a ditch, right? That's why even the slightest disturbance is enough to make everyone break out in a cold sweat. Ever since Trump took office, the whip of high tariffs has never stopped lashing risk assets. Originally, everyone was hoping that the Clarity Stablecoin Act would give the market some legitimacy, but now the bill is stuck in Congress with no further progress. What's even worse is that those who were counting on the yen's quantitative easing to save them ended up waiting for nothing. At this point, not raising interest rates is already considered good news. Right now, prices are just barely holding up, but people's confidence is starting to waver and collapse. It's like a room filled with gas. Whether or not that match gets struck is the real question.
The market experienced intense volatility early this morning, with Bitcoin officially losing the $87,000 support zone and dropping as low as $86,000. After successively losing the psychological thresholds of $3,000 and $2,800, Ethereum is showing a deteriorating technical trend. The $87,000 level is not only the focal point of weekly level battles for 2025, but also the final psychological bottom line for the bulls. This breakdown with heavy volume means that the consensus among funds has shifted from a pullback for consolidation to a strategic retreat, and market risk is evolving from a localized correction to a systemic trend reversal.
In fact, once $87,000 was broken, the script for this whole play changed, so everyone shouldn't rush to buy the dip. What's the top priority right now? Survival. By survival, I mean protecting your principal. Next, the area between $68,000 and $74,000 isn't just about a few lines on the chart. This is absolutely a public trial of the bull psychology. If the bleeding can be stopped here and the big ETF buyers are willing to step in, then we can still call this round of sharp declines a violent shakeout. If this level is lost as well, then all the confidence built up over the past 2 years of gains will completely evaporate. Take my advice, everyone. When people are so scared they can't even bear to look at the market, that's exactly when leverage is about to be forcibly liquidated. At this point, the market doesn't care how much conviction you have. There's only one thing that matters. Before this season's finale, are you still at the table? OpenAI, Google, and Anthropic are all showing off their unique strengths. Can XAI, with its computing power and integration, overturn the AI game? The big companies are pulling out, the industry leaders are pivoting. Can the story of NFTs still go on? Sometimes we make our views very clear because, as adults, we believe in choosing rather than teaching. If we can agree in theory, share the same outlook on life and values, and come together in a community, that's a kind of fate. So, in today's AI circles, a lot of people are watching to see how Elon Musk will shake things up. In my view, among all the AI big names, only Elon Musk can truly be considered an entrepreneur. If you look at OpenAI, their whole focus is on working for the company, in plain terms, making money, running processes, and integrating systems. As for Google, they want to turn Gemini into your digital foundation, hoping you'll switch everything over to Gemini. Then there's Anthropic's Claude, which takes a steady approach. It can remember, handle office tasks, and makes things clear for everyone. AI is no longer about chatting. It's about delivery, infrastructure, and entry points. Don't let the X.AI controversy fool you. In system integration, Musk is a sly fox who only fights battles he can win. When it comes to AI, he's ready to upend the whole game.
As a startup with only 2 years of experience, X.AI completed in just 122 days the kind of infrastructure deployment that typically takes the industry 4 years. Their computing cluster, equivalent to 500,000 GPUs, is now scaling toward the million level, and they've even resorted to extreme measures like airlifting gas turbines to break through energy barriers.
Do you think of them as one of your biggest competitors? I mean, it looks like they're coming on really strong.
Yeah, I assume they'll be a really serious competitor. Rumor has it that Graphite is aiming to break the ceiling for large models with a scale of 7 trillion parameters, combined with real-time data streams from the X platform. At the same time, the open source force Claudebot is leading a declouding revolution, decentralizing AI agent authority to personal devices. By rewriting code and automating execution, it's challenging the monopoly of traditional cloud-based automation services.
So, I used to think that closed loop AI was still a long way off for us, but after seeing what's really going on behind the scenes, I realized it's actually much closer than I thought. So, if you look at the big names right now, one group is teaching you how to be your own local emperor, while Elon Musk is showing you how to put your grok into your phone, your car, your robot, basically creating a super brain that controls everything. And what is the real capability of projects like Claude Bot? It's about putting AI into your own computer, making this AI assistant answer only to you. So, have you all understood this logic? These tech giants aren't competing to see whose AI is smarter, they're racing to become your digital butler. The real game changer isn't that AI can write poetry, but that it can now write code, run processes, and act as your personal manager. AI has evolved from just chatting with you to becoming a CEO that can influence and even control your mind. All right, let's take a look at the NFT world this year. It's pretty bleak. It's no longer the wild days of 2021 when owning a monkey picture could get you a luxury house. Hot money is pulling out, the stories are worn out, and trading volume in 2025 has dropped by nearly 40% compared to last year. This isn't just a winter, it's like we've gone back to the ice age. So you see, even the big companies are pulling out. Nike has shut down its operations and is facing a slew of lawsuits. Platforms like Bybit are also packing up and leaving, and even the former leader, OpenSea, doesn't really talk about the old NFT dreams anymore. They've switched to trading tokens just to make a living. Now it's the turn of the veteran crossover project Nifty Gateway. They can't hold on any longer either.
Problem with that is it's ridiculous. It's absurd. There's nothing to it. It's a giant scam. It's a giant Ponzi scheme. It turns victims into victimizers.
Nifty Gateway has officially announced that it will cease operations on February 23, 2026, and the platform has now switched to withdrawal-only mode.
Users must withdraw their assets to a Gemini account or bank card within 1 month. At its peak in 2021, the platform set an industry record by surpassing $300 million in monthly transaction volume. Even after rebranding as Network Gateway Studio in 2024, it was still unable to reverse its declining momentum. This shutdown marks the end of an era for digital art asset platforms.
So this time, Nifty is closing its doors under the pretense of launching some kind of super app, but in reality, business just isn't good and they're cutting their losses. I think this is completely normal in the business world, but the NFT scene isn't completely dead yet. Look, just as everyone was pulling out and switching platforms, NFTs actually had a brief resurgence last week. The market cap jumped by $500 million in 2 weeks, and there was a single day trading volume of $300 million. So you see, there are still big players like Animoca Brands who are busy acquiring SOMO and expanding their ecosystem. Right now in the NFT world, some people are rushing to the exam hall overnight, while others are resigning and heading home. So in the comments section, write down whether the NFTs you've bought have made you money or lost you money, and let's see how many people still have faith in NFTs. All right, time to run.
He wrote 114,000 words. Zhao Chengpeng, the research and innovation god, is finally about to hand in his paper. He said the book will probably be published between the end of February and the beginning of March, and it's about his personal experiences and the ups and downs he's witnessed in the crypto world over the years. The money was invested, but the door was shut. The Hong Kong police received a report someone was lured to invest in virtual currency on a platform, poured in a total of 21.4 million Hong Kong dollars, and only discovered they could not withdraw the money when they tried. Most likely, they fell into a trap. No one can touch Qian Jimin's 60,000 bitcoins now. Today, the court session was held in the UK, but there were so many lawyers that it gave the judge a headache. They couldn't reach an agreement on how to split the money, so we'll have to wait until February 16th to see what happens next. No one expected that the place most responsible for safeguarding assets would be the first to have a problem. It was only when the Gwangju District Prosecutor's Office in South Korea was inventorying seized items that they discovered the Bitcoin private key stored on a USB drive had been tampered with. 70 billion Korean won, about 48 million US dollars worth of Bitcoin, had already vanished without a trace, leaving everyone baffled. Japan is also starting to loosen up. According to Nikkei News, Japan's financial services agency plans to allow spot Bitcoin ETFs in 2028. The message is clear. They want to observe carefully first and only then gradually let you enter the market.
To be honest, if you can easily grasp the logic behind this, then most of the profits from this round have already been taken. In today's crypto market, the more sensational the rumors and the more influencers keep repeating the same stories like parrots, the more likely it is to be a trap. If everyone can understand the logic, then it's not called an opportunity anymore. It's called consensus. Remember, in our line of work, once consensus is reached, the show is basically over. Those who truly understand are the ones who get in when the data is still unclear and everyone else is still arguing. If a story's been told for too long, sounds too smooth, and seems completely risk-free, it usually means someone is waiting for you to come in and foot the bill. So before you enter, ask yourself, is this logic already everywhere? If it is, then it's a liquidation, not an opportunity. The market never rewards those who love listening to stories. It only rewards those who secure a front row seat before the storytellers even open their mouths. If you get it, feel free to give a like. All right, that's all for today's program. All the membership benefits are included here. Gold members can watch our exclusive short videos every Monday at 8 a.m. Let's hustle together and gradually get richer. See you tomorrow.